Thank you to the entrepreneurs. Thank you, Sarah, for excellent moderation. While we're preparing the stage and getting everyone outside the room, inside the room, I'm gonna ask Karen Wilson. Here she is. She will be your moderator, and the panelists, if you could join me on stage. And we're getting ready for, yes, thank you. We're getting ready for this panel on the role of the financial sector and the role the private sector and the financial sector will play to advance the implementation of the SDG.
All right, so good afternoon, everyone. It's a pleasure to be here with you all at the Social Goods Summit. I'm Karen Wilson. I am leading the work on impact investing at the OECD. I'm in the Private Finance for Sustainable Development team there, along with colleagues that are working on green finance and blended finance. And this is my third time, right? I think this is the third SGS. And I really give a big congratulations to UNDP for organizing this great forum. It's really become an important event on the calendar that's bringing together key stakeholders from across the public sector, private sector, civil society, et cetera. So thank you very much for having me back. And I'm really excited about this panel. We're going to be discussing the role of the private sector in financing the SDGs and also in mainstreaming sustainability. So very important topics. We have a very short period of time and we have an amazing panel. So we're going to jump right into it. Let me just briefly introduce who we have on the panel. First of all, we have here Olivier Rousset. He is head of social impact solutions. I love that. From Credit Suisse. So thank you for hosting us here. Next, we have Marcos Neto. He's the director of private sector from the UNDP. So thank you for organizing all this with your colleagues. And finally, we have Olivier Betz. I'm sorry, Oliver. I knew I was going to do that. We have Olivier, Oliver, and I was going to call myself Olivia just to confuse things. But anyway, we have Oliver Betz, who is Senior Vice President for Innovative Business Solutions at SAP. So again, we really have quite a panel of experts, and most importantly, we have a mix of the public sector and the private sector, and within the private sector, the investor perspective and the corporate perspective. So we're going to handle this as a conversation. No speeches allowed. I have a signal to them if they talk too long. And so I just want to jump in with the first question. And Marcos, I'll turn this to you. Why everyone's talking about the private sector and the billions to trillions, et cetera. Why is the private sector so important? You know, we know that the SDGs have gotten a lot of traction, obviously in the public sector. There's growing interest in the private sector. But why is the private sector so key?
Thanks, everybody. Thanks, Karen. Thanks, Maria Luisa and the team for organizing this. It's a very simple answer. There is no SDGs without the private sector. It's as simple as that, right? And it's not just a matter of money. You know, put up your phones. Yeah, that there. Muni has his phone up. You know, put up your phones. Does anybody remember how old is those phones? It's a decade old. Something that you cannot live without it did not exist 10 years ago. That is the private sector. Talk about getting to scale, talking about getting things to a penetration that, you know, there's more phones than people in the world right now. You know, that is why the private sector is needed. There is no SDGs without the private sector. That is as simple as that. Now, let's also not forget that 2008 was caused by the private sector. So it is not the traditional 20 years old system of engagement with development that is also going to deliver the SDGs. And more important, the SDGs, and Maria Luisa mentioned this morning, have a $12 trillion a year, every year for 15 years of business opportunities inside it for the private sector. So this is a very different agenda. It's one that talks about the private sector's core raison d'être, to make money. It's one that demands the private sector, if you want to make the money, to change business model and to change investment priorities, searching for proactively that triple bottom line return, and is one that we at the United Nations and NGOs and governments need to change and to adapt it, to support the change of investor strategies and business models, and better regulate it and provide the enabling environment necessary for that shift. So the message is very clear. There is no SDGs without private sector. The private sector has to change it, and the governments have to change it to provide the right enabling environment. And at the end of this, you have the end of poverty, you have the management of climate change, and you have a pot of gold for new types of markets and new types of profits. So it's the classic, if we make it work, it's the classic win-win-win situation.
Wow, a pot of gold at the end. Okay, I hadn't seen that in the SDG diagram.
It's the rainbow, you see. It's the rainbow. What is at the end of the rainbow?
Perfect.
It's a pot of gold.
Perfect. Okay. I want to come back to you for a minute because the MDGs, the private sector was not engaged. So what's different this time? And already starting with the design of the SDGs, and why are you so optimistic that the private sector will engage in the SDGs where they weren't so engaged in MDGs?
First of all, it's about that $12 trillion a year. You didn't have a quantified economic opportunities where the Business and Sustainable Development Commission not only gave us the amount, but gave us the 60 areas of business innovation, the 6 areas of business opportunity that exist, right? So you didn't have that on the MDGs, which is a very traditional social agenda. So the MDGs did not speak to, new markets, new business opportunities, new financial returns, which the SDGs does, right? I think the second one is exactly what you said. The SDGs were designed on the largest public consultation, including with private sector in the world. The day the SDGs was signed, PwC had a survey out that said that 92% of business around the world of different sizes already knew of the SDGs. I don't think we got to 50% by the end of the MDGs. Right, so awareness was born, raised from that point. And I also think, and the third quickly point is, I also think that there has been an overall systemic change in the marketplace, right? The growth of ESG investments, assets managed under the environmental, social, and governance precedes the SDG, and it has accelerated in the last years. Now, if you look at ESGs, it is clearly the beginning of a change to an SDG investment in that sense. So I think there is a series of elements that makes the SDG much more appealing to core business, which is where we need to do, than just the corporate social responsibility, which we need to build upon.
Great, thank you. Well, that's a nice transition to you, Olivier, about the view from the financial institution, from the investor sector. How are investors looking at the SDGs? How are they thinking about it? And are they jumping on the bandwagon?
So yeah, I think it's really the role of financial institutions and responsibility vis-à-vis society to achieve SDGs. And as Marcos just mentioned, it's a business case. So we need to change perspective. It's a business case, and actually a scary business case if we miss it, because it's losing economic opportunities. We are, like a bank would lose future clients, like the millennials, also future deals, social bonds or infrastructure in emerging markets, and also losing assets if a bank, for example, doesn't offer impact investing. So really, that's a key message, that it's an opportunity not to miss, otherwise we lose economic opportunity.
I attended the PRI annual summit last year, and there was a lot of talk about ESG and trying to get investors and companies to sort of comply with ESG. And impact investing was in a corner, in a side room, because many of those people in the room, these big institutional investors, et cetera, hadn't yet gotten there with impact investing. That was sort of a step too far. Is that still the case? That was a year ago, and everything is moving really quickly. So what's your sense of how the investor mindset is changing around the SDGs and around investing for impact?
Yeah, so when you're in the middle of it, you don't always realize how much progress has been done. But over the past 3 years, it really has been exponential progress to make an impact on society and environment through impact investing. I think ESG today is mainstream, is a great step that has or that is being achieved right now. But it's a stepping stone for impact investing. I think ESG investment focuses on processes, but not on the externalities, on the outcome. And that's where impact investing comes in, making an impact, so achieving specific SDGs through investment. And yes, the field has grown tremendously. I mean, we have figures showing double-digit % growth. And more and more clients, investors are sensible to the thematic.
Great. So we see why you're head of social impact solutions at Credit Suisse. So Oliver, let's turn to you for the corporate perspective. How are corporates looking at the SDGs, and are they also galvanizing behind them?
Yeah, maybe if you look what's going on in the industries, every industry is facing disruption these days. Right? You all know these stories about what is going on, like the taxi business with the Uber example. But I mean, here we're in Geneva, the financial sector is getting disrupted. I mean, all these fintechs are coming up. So this happens in the industries. While this is happening, the people have to anyhow to change the business processes. And that's a perfect opportunity to redefine the processes in the context of the goals, right? Second thing is, I mean, it's more and more consumer-faced business. So we as a consumer, we are getting more and more empowered. So also you have to change the way you deal with the consumer and the workforce, and that is aligned with the goals. I think that drives the behavior that we see these days, that the corporates in this, what we call this digital transformation, that they change the business processes, that they redefine the business processes, and in that context, that they adapt more and more the goals.
Great, and Marcos, you started by saying, well, I'm going to come back to Oliver for a second, but you started by saying that the SDGs aren't just about the money, and I think both of you are reinforcing that, saying it's really about the solutions. It's not just getting the private sector in to bring more money in, it's driving towards new solutions that will address these issues in different ways. So what have you seen companies doing to, and perhaps what are some examples of what you all have been doing at SAP?
I mean, the interesting thing when we talk to a lot of clients, they're still at an initial phase. At the end, when you look at the goals, to comply to the goals, to be measured against the goals, you first have to really get an understanding of the data within your company. If you look like a big corporate, we talk about data which is spread over a ton of different systems. Even simple things like gender equality. So what is the percentage of women in workforce, which we are reporting as SAP also to the stock market? First, you have to get the data together, and typically it sits in 50 HR systems. I mean, that seems easy, but that's a project work. So that's what we are seeing, what the clients are doing, and that's a stepwise approach.
Great, so we're seeing more and more companies and investors that want to align with the SDGs. So Marcos, back to you. From a UNDP perspective, what needs to happen to bring us towards SDG alignment?
So what we've been seeing around the world, it is that you have awareness. I think there is a clear understanding in companies and investors that the pressures are changing, the millennial, the consumers, the growing long-term liability of pension funds and sovereign wealth funds with people living longer. I was just in Tokyo 2 weeks ago, and Japanese largest percentage of people in Japan living beyond 100 years old. Well, that's going to demand that pension funds liabilities are grown older. Therefore, the investments have to generate returns, not on the short term, but in the long term. So all those pressures are making this emerging system of, if you want, SDG-aligned investments and business models to grow. But the how is a problem. As Oliver just said, to just grasp with data, to just understand what are you doing, how you're mapping this to the SDGs is like the first step. And then how do I internalize the SDGs as a business strategic framework or as an investment framework? The how is still a complicated exercise. And we at UNDP, what are we doing is trying to contribute it with partners on the how. So just an example, and Luisa mentioned in the opening, we're putting together this new program called SDG Impact, right? So we've put a partnership with the Impact Management Project, which has 700 investors in GRI and PRI and OECD and everybody behind it, you know, and the belief that what the Impact Management Project has done out of London was to basically define a consensus of standards of what is impact. Now, you know what it is impact, but how do you operationalize? So what UNDP is doing in partnership with the IMP is to create a certification process, which eventually will lead to a seal. So, you know, someone, a third party, not us, will be able to certify, you know, a fund that Credit Suisse has and says, okay, that fund, according to the standards of the IMP, is aligned with the SDGs, and a seal will be issued. So that is starting to help them define impact, help them understand impact, but also help the community, the global community, to understand that fund has a seal, therefore is SDG aligned, that fund doesn't, right? And then how do you match the companies? So how is the companies aligned with the SDG, which then gonna be in the forefront to receive that fund that comes from them? And then how does governance put in place the policy? So we are trying to work at UNDP on providing solutions, tools on each one of those three phases which come together as a system. And I just give you one example on the impact management.
Great. So at the end of the road of the SDGs, there's a pot of gold and there's a seal from UNDP. Perfect. Okay. No, but
the key to the pot of gold.
Exactly. But I mean, as you said, it's very important to have some sort of standards and metrics that we understand. Otherwise, we've already seen a lot of social washing and greenwashing and already SDG washing. So how can we make sure to keep people's feet to the fire and that we know what impact is and what people are really measuring? So, so the seal is coming. I think that's going to be super helpful. In the meantime, investors and corporates are facing, you know, what to do tomorrow in terms of measuring impact. Obviously, you're already doing things to measure impact, but how are you thinking about this at Credit Suisse in terms of how you measure impact, what kind of indicators you use, et cetera, trying to deliver on your own commitment, but also clients' interests in this area?
Sure. First, I think if we're not able to measure impact, we cannot qualify the investment as impact investment. So that's the first rule. What's important is to embed the SDGs in the investment process. So at every step of the investment process, the sourcing, the assessment, the monitoring of the investment, and the reporting. When it comes to reporting, what we need is accurate data on the impact the investment does. And there are some SDGs where it's quite obvious what the impact metrics will be, others not so much. I mean, for example, SDG 16, I think peace and justice, that'd be difficult to find an impact metric. So I think it's fundamental exactly that the industry consolidate in terms of impact metrics like it did 100 years ago with financial metrics to have really the right tools to measure the impact.
Great. So having the right metrics and indicators is really important, and we have a lot of indicators already. The problem is we don't have data potentially for the kind of indicators we would like additionally. So Oliver, I know that SAP, you already started to talk about the work that you all are doing on data. I know that you have more in the pipeline.
But maybe just to make that example more clear, it's even worse. I mean, if we talk to our clients, I mean, it's hard to get the data together. But give you an example, for example, about employee well-being. So what we do is internally, we run a survey in the company, 90,000 employees once a year, which talks about approaches to employee, what's your stress level, what's the whole thing. So the whole management is looking at that. 3 months later, the report is there, and then you start to execute on it. I mean, that's a process which is from the 80s. if you would do it in real time, you would have an engagement. I mean, you talked about these phones. I mean, the technology exists these days, right? So we can, the same what we do with the consumer, we can do to our employee base to stay in the corporate level. On a daily basis, you can interact with your employees, you can look for problems, but also they can judge the stress level they have and all the things. And then you would have a real-time reporting on a daily basis. I mean, that's how the future should be. Reality is, we are still in these 80s worlds where we run processes a quarterly, a monthly base, a yearly base, and that has to change. And the technology is there. We have it, others have it, but it's the companies which have to change the processes and the way to manage that.
Yeah, and related to that, a lot of people are still in this mindset of it being all about the number. You know, let's put in a lot of data and crank out a number, and at the end you have your impact is 5. What does that mean? Yeah. You know, 5 relative to what, and in what context? So, you know, I think a lot of people have lost sight of the fact that it's not just about the measurement, but it's about the whole process of managing and learning and improving the processes, and therefore the impact measurement and management project has really put an emphasis on that, which I think is really important. So I know that you all are doing some further work in terms of data and dashboards. Could you tell us a little bit more about that?
Right, because at the end, I mean, if we manage the first step that we have provide these data in the dashboards, then we can provide the visibility against also on these KPIs. I mean, in the end, it's a collaboration, it's a partnership where we want to bring everybody together and say at the end, you want to benchmark yourself against the others. I mean, and we have the access to the customers. I mean, we have the top 500s, so we could do benchmark per industry, per region, and then everybody can understand on the reliable data how he's tracking, how he's managing, and that's what we want to do.
Great. So it's obviously very important. There are a lot of great initiatives going on in the industry. I think that we're all seeing a very clear trend towards mainstreaming of impact and really trying to figure out how to develop the kind of measures that it can become mainstream, like financial measurement. And but we still have a ways to go. But a lot of smart people and a lot of great work going on. And increasingly, again, Marcos, as you mentioned, more and more collaborations, which I think will help us move forward. Because until now, it's been too much of everyone doing their own thing, and lots of pockets of great things, but it's not moving the industry forward. But I think there's a lot of promise, and we can see the path to that pot of gold at the end there. So I promised I wouldn't take more than 20 minutes with the panel, even though I could ask them questions all day. I promised to open up to the audience, so I'd like to do that now. I'm going to take several questions in batches and then come back to the panel. Maybe I just have to take one batch. We'll see how we do. Okay, I think you were first. And please briefly introduce yourself and very briefly ask your question.
I'm Laurent Devel from Blue Ocean Watch. I know there's a number of things that have been done from the finance industry in the SDGs. I'd like to put things into perspective. The green bond market is about 1% of the global bond market, perhaps 2% if we take corporations. So I really like to do how the banks and corporations can really move things faster and perhaps higher in terms of their results and impact. We've heard this morning about the GIEC report. We don't have so much time to act. And the question for Credit Suisse, for example, would be, would you be ready to allocate your portfolio of assets in a different way, reducing, for example, your revenues in the coming few years by decreasing your fossil fuel clients, moving into a more renewable energy client base?
Okay, thank you. Maybe a little bit shorter question next time would be even better. Okay, thank you.
Thank you very much. MDGs, private sector used to be engaged in specific way during MDGs, but during SDGs, private sector are maybe, hopefully, in the better way, of course. But yes, this is the meaning, as I heard it is true. At the end of the MDGs, private sector, they are more engaged. But accelerating 2030, it's the substance. Because since the beginning, since the SDGs have been adopted, private sector are welcome to they are engaged. And this is what summarized the summit just SDGs have been adopted in Addis Ababa Action Agenda. But my question, if I should rate questions, yes, private sector, they're doing more or less like state government. But how about public health, global health? We should promote health in all over the world. Thank you.
Okay, other questions? We'll just go around the room this way. I think that's maybe easier. Are there mics over here too? Yeah, great, okay.
Okay, promise this one will be short. Paul McIntosh, Capital Communications.
There'll be an award for the shortest question.
Right. Paul McIntosh, Capital Communications, the big institutional pools of money, the major pension funds, the sovereign wealth funds, the Norwegian oil funds and other such players. How much influence are they having on driving behavior towards the SDGs, and how much more should they and could they do?
Okay, let's take some over here. There were two over here.
Edward Girardet, editor of Global Geneva magazine. Just one brief question. Obviously, the SDGs will not succeed given the amount of money commitment there is right now. And the private sector, obviously, is going to be crucial, absolutely crucial. My question, though, is the fact that journalism and media was never made an SDG, which I think is an extremely dangerous thing not to do. Obviously, it's better to kill journalists these days. But the thing is, what is the private sector doing about supporting the sort of initiatives that will actually inform in the public interest, particularly young people? Thank you.
Okay, so I got the 3-minute warning. So Arthur, you have the last question, but you have the opportunity to make it the shortest of all. So thanks.
Arthur Wood, Total Impact Capital and Project 1800. The SDGs are roughly $2.5 trillion short. There is a market crash that adds another trillion. We ignore climate. We ignore the fact we're using 1.7 times the world's resources. UBS is going to put $5 billion on. You're the same. 150 billion is what you've got to be looking at. What are we going to do other than talking about what we're talking about here, which is silver bullets? It's about collaboration, it's about scale. UNDP, you have 35 projects, none of which that speak to each other in impact investment. When is somebody going to create a structure that actually creates the infrastructure, one, that does this in a cost-effective way, and two, when are we going to realize the universal metric is the externalities, the hundreds of billions of dollars a year in the cost that it costs society? When are we going to make that a market, and when are we going to accept that financial innovation can do much more, because where we're currently heading here with silver bullets or up the road with $150 billion and declining is not going to get us there.
So infrastructure and the whole discussion about platforms and how we link all the many different platforms that are out there. Okay, since we're so short of time, I'm just going to go down the line here and ask each of you to answer whichever questions you would like. And then if you could just give your sort of final thoughts on next steps from your perspective. Olivier.
It's difficult to remember all those questions.
Pick the ones.
Well, I'll pick the one on the revenues, sort of conceding on revenues to have a portfolio more aligned with SDGs. I think it's a question of investor interest in the end. I mean, our business is proactive to implement SDGs, but there is a huge work to do with raising awareness about SDGs, about impact investing to the investor. So it's more driven by if the investor is ready to have another approach to portfolio allocation. We can find a way to do this, but you really need to change the mindset of the whole financial industry, because so far asset allocation has been by asset type and not by topic. So it's a very different investment process. Revenue-wise, I don't see why I would concede on revenues, because it's a SDG-aligned portfolio. I think, again, it's a win-win situation where it's a business case. More clients will invest that way, and there is no reason to lower revenues today.
Great. Marcos?
So trying to connect the two questions, Arthur, and the communication in one answer. And just to say that if we start with the premise of lowering revenues, this conversation is dead. I completely agree with you about the externalities having to become the way forward, but the externalities, we live in the world that the greatest bottleneck for me is not money. The money exists. Is the long-term, short-term nature of money. The SDGs is, and it's been proved by research on the ESG investment, you get the similar returns, you get even better return, but it takes longer. So we have to break down short-term capital markets, and we have to break down short-term incentives for payment. We have to break down short-term nature of business and investments. Now, for me, and links back to the big pension funds, right? And I think the demographic changes and the longevity of people are going to force pension funds to become more active and demand a long-term return rather than a short-term return in that sense. The returns have to be good market returns, and they have to be good market returns for a long period of time. And I think the SDG is the only framework out there that will give you that capacity in that sense. And I think what all your questions have come to say is this is a systemic problem, right? Which demands a systemic solution. With all due respect, I don't think we are talking about every time I hear about another impact investment fund be created, being 150 million, being $1 billion, being 1.5 billion, it makes me cringe, right? Because the solution does not lie on another fund being created called impact. The solution lies on how does the entire portfolio of Credit Suisse generate a triple bottom line return. It does on how does 100% of SAP operations generate a triple bottom line return. With all the respect, I think we needed to put it at a target, $5 to $7 trillion. We needed to put it at a target of a gap of $2.5 trillion. But there is no gap in the SDG finance. If you find a way, and we are all trying with pieces, to change the system. The notion of a gap is, okay, the response to a gap is let's create another fund to close the gap. My response is, let's change the entire financial industry incentive. Let's change the business model incentive. Let's change the system. So $207 trillion of the world economy work for the SDG. There's no gap. But you have to change the system. If you don't change the systemic nature, we are going to be doing with silver bullets forever and ever. And we are going to be doing with 35 projects that don't talk to each other. And I put my hands up there. I own 3 of those projects. But at the end of the day, it is a systemic change, and it's painful, and it's more difficult. But the pot at the end of the rainbow, and it's not just a pot of money. It's a pot of money. It's a part of the end of poverty. It's a part of managing climate change. It's a part of a better life. But it's a system that has to change. There is no more need for an impact fund. There is need for every fund to be impactful.
Oliver?
Trying to keep it short, right? Sorry, I took your... No, that's good. And I try to make it easy. If you look, talking to a lot of customers, when are they willing to do change? If there is a sense of urgency. Our customers in all the industries feel a sense of urgency these days, but it's mainly driven by the consumer. If you offer a service which is not aligned to the goals, and the consumers say, you know what? I don't buy your service anymore. I don't go to the bank, I don't buy the car, and that's when the change happens. So at the end, the major force is the consumer. It's our kids, it's us, this will drive the change, and this is for me the main driver to accelerate it, because if nobody buys something, the companies are out of the business, and that will definitely change.
But that's why the communication is so important.
Great.
Global campaigns have to become much bigger.
Exactly.
And much more powerful.
Yes. Communication, yes. So clearly we see a mainstreaming interest in impact, and it's more than just a fad. It's here to stay. There are really some systemic changes that have taken place, and this is here to stay, and there's a lot of great work being done. And again, because there's more and more collaboration and connection, and technology allows us to leverage these connections, I think the future is very promising in terms of really making progress. And whether it's by 2030 or not, I think, at the end of the day, It's that we're going in the right direction and that we're really embedding SDGs and impact into everything that we're doing, public sector and private sector. So with that, we're a bit over time, but it was a very good discussion. So thank you to the panel and to the audience.
Thank you very much. Maria Luisa, UNDP, Kustrim, Reka, I would invite you on stage to give the closing remark of the Social Good Summit, please.
So we've come to the end of this third session of the Social Good Summit. I think it has been a very productive morning. We had 24 entrepreneurs showing their innovative ideas coming from 16 different countries. And we have been extremely impressed by the dynamism and the engagement and the amount of conversations happening at the same time, but also about the discussions like the one we just had today, which really shows there's a very interested community here that we need to continue working together. And we also heard a sense of urgency. And I think we've taken the message.
We as a community cannot simply tinker at the margins of our global financial system. We must transform it so that it works for sustainable development and produces real impact for those who need it most. On the topic of impact, it's wonderful to have the Accelerate 2030 social entrepreneurs join us today from Ghana, Colombia, Brazil, Rwanda, and Ukraine. You provide incredible examples of how businesses can contribute to the SDGs, making a business model work while having impact on the communities. And I can't emphasize enough the power of good examples and best practices to generate the kind of movement that we need to get. As I close, let me first of all wish you all a great afternoon of networking. The Meet and Connect event this afternoon is hosted by the Geneva Sustainable Finance Collaboration, a collaboration convened by the SDG Lab in my office, along with the IISD and Sustainable Finance Geneva. It's a network and an ecosystem that is being created and a strengthening that is beginning to show some real promise. The collaboration aims to bring the two sides of Lake Geneva closer together to produce new models for finance to accelerate the implementation of these goals. And we recognize that this kind of ambition and action-oriented collaboration begins with strong relationships. And I thus hope you each will take full advantage of the afternoon that awaits you to start strengthening some of those relationships. I thank you all for your continued commitment to the Sustainable Development Goals, and thank you for having invited me here today. Thanks.
It is indeed necessary to evolve in this way and to mobilize financial centers in the transition to a sustainable economy. The momentum is now clear. The integration of environmental, social, and governance factors into investment portfolio is a major challenge. The green bond market continues to grow, certainly slowly, but it continues to grow. Many governments are developing national roadmaps and strategies, while financial regulators are integrating environmental risk into market surveillance. The challenges associated with the financing of the SDGs represent an international concern and should be addressed collectively. In this respect, we aim to strengthen our collaboration with the international organization based in Geneva, and therefore consolidate our renowned competencies in the field of finance to ensure the achievement of the SDGs. By hosting the International Network of Financial Centers for Sustainability, Geneva has a unique opportunity to strengthen its position as a key player in sustainable finance and impact. Making Geneva the international crossroads of sustainable finance is one of the key objectives of the Canton of Geneva economic strategies. With this kind of initiative, we further aim to generate tremendous added value for the ecosystem. However, none of this would be possible without current and future market players with a strong educational background and up-to-date professional skills. Building capacity and expertise on sustainability and finance represent also a strong focus of the State of Geneva. Ladies and gentlemen, allow me to conclude here by wishing you a very pleasant discussion for the rest of the day. I hope the debates will bring positive results, and we will have the pleasure of welcoming you back to Geneva soon. Thank you very much.
Thank you very much. So I'm going to invite you now to enjoy our lunch, but before you go, remember, the afternoon is dedicated to networking. We have Meet and Connect, which will be in that space with 11 experts focusing on different financial topics from climate change. I think there is blended finance, impact measurement, and many other. So I would really encourage you to attend that Meet and Connect. And it's like a speed dating. It's 25 minutes around a topic. You've got a chance to meet 10 people, and then you move to another table. So altogether, you've got the chance to meet about 50 people. On that side, this is the marketplace. This is where you're going to meet the entrepreneurs that you have listened this morning. Great opportunity just to catch up and go in deeper conversation. And upstairs, have a look at the program. We've got very exciting session upstairs as well. Thank you very much.